Good morning, everybody. Welcome to the Flow Show. Back from me jollies, and missed a week and a half, it seems, but I don't mind that. It was nice to get a bit of a break. Hope you all fared well last week, and no disasters happening on your trading books. Morning, Kay. How's it going?
Morning, Ryan. Welcome back, mate. Yeah, it's been all right. It's been a bit of a busy week, and we kept very busy with the people on our flow show as well. We had a lot to talk about. So, but it's I guess it's not we're not done for as long as there's a certain orange hurricane in the White House. Things will keep on the move, I guess.
Yep, absolutely. Hopefully that'll keep us through the summer, because things can tend to get a bit quiet at this time of year, but doesn't look like that's going to be happening anytime soon. Right, before we crack on, just to bring you up on what's happening this week. As you can see on the screen there, we've got a free risk management webinar happening this Thursday, 7th of August. If you want to take part in that, you'll need to register on our newsletter, which will get you all the tidbits and updates on what's happening at ForexAnalytix. I'll put the link in the Zoom chat there. So get on board. A free risk management webinar where a good chunk of the team will be taking part in that and giving you our advice. We often give a lot of risk management advice here on the Flow Show, but you can get that all in a webinar on Thursday. So register at that link. If you've already pre-registered for the newsletter, don't worry, you'll get that link anyway if you haven't already. I think that went out at the weekend, or it will go out on a separate email, so you'll only be able to access it via that link that will be sent exclusively to you. So make sure your emails and whatnot are set up, and we've got anyone who signs up for the newsletter in the month of August will apply automatically for the draw for another trader funding program assessment account, and also a free coaching session. So that's the offers we've got for August. So if you haven't already, sign up at that link, and you'll get access to all those goodies and the latest updates of what's happening at ForexAnalytix. Right, moving on. Let's get cracking in on some of the headlines. So before I went away, we were talking about this, and this is typical Japan rules and regulations. Nothing's a deal unless it's signed, sealed, and delivered. And Japan's economy minister Akazawa, he's been the main one negotiating a lot of this stuff, says a trade deal is not formalized on paper, and the same can be said for the US-EU agreement, and that waiting for a deal in writing may have delayed the levy cut. Says the US-Japan trade deal isn't a legally binding commitment, so they're still waiting to get it properly sealed before they enact on it. Now other countries may start enacting on stuff just on the basis of a framework, but not in Japan unless it's been rubber stamped, wax seal of approval. It ain't gonna happen. Kay, how long's this been dragging on for?
Oh, since they agreed. See, no, I think we need to reformulate trade agreements. The US agrees, and then the counterparties have yet to find out what they are, what salt they will get eaten with, and then they still have the right of response, I think, and it's been ongoing really since both agreements between the EU and the US and the US and Japan have been announced. The Japanese deal, I don't think, well, unless I missed something, is still not signed, right? And I don't think the EU deal is completely put to paper yet either. So we've been talking about it last week a couple of times, and there is still it's still ongoing, mate. Still ongoing.
Yeah. Now, is this going to be affecting yen assets, Japanese assets, bonds, yen, and whatever. Because as far as the market is concerned, if a deal's been struck with Japan, EU, whatever, the market can move on. But with Japan saying no, nothing's happening until it's signed, sealed, and delivered, is the market going to pick up on that and think, well, forget the EU, we don't care about them. They'll sign something in a month's time, and it won't matter. But with Japan, because they're so strict and stringent, is this going to impact prices over there?
I think it actually does. If you take away Friday's move, it's clear that the Japanese yen is still not one of the favorite currencies to own, and suffice to look at in the broad lines of suffice to look at those yen crosses. I would say if you look a little bit away from the dollar side of things, we had a setback risk, got hammered, the market got stunned on Friday. It all weighed quite heavily on risk, etc. But once it's coming back, you look at the euro yen. We're still trading above 170, right? It's not as if the market goes, okay, it's time to start to buy yen. No, because this lack of comprehension, perhaps even of on the Japanese side of everything that the US wants them to do, is holding, I think, the investors back from diving into Japan. Let's not forget as well, sorry, that they are supposed to buy tons of US stuff, and are supposed to invest over $500 billion in the US, and they've repeatedly said last week as well they didn't know, or didn't really talk about the details of those investments. Obviously, if you would listen to Trump, they should invest today the whole lot. But I mean, nothing is really done, and for as long as it's not done, we won't know the immediate effect on fiscal balances and stuff like that. Current account balances. How is that going to work? Because that is one of the pieces of the puzzle where investors would like to buy or not buy yen, is the account balance. If the current account balance turns negative all the time, I mean, who is going to buy yen at 0.5%? Even if the Bank of Japan increases another 0.25% before the end of the year, why would you really buy yen? And there's still the aftermath of the elections, where Ishiba will have to take at least one third party up every time, because they don't have the majority anymore to get anything done. And if we talk about a third party in Japan, none of well, all of them will weigh on the fiscal balances, and yeah, I think the whole package. Yes, yen is now stronger than on Friday, for instance, but that has a lot to do with risk. And as I said, the market being stunned, but give it a couple of sessions perhaps, and then we will see where those yen crosses are, especially the crosses, I would say.
Yeah, absolutely. And I think we've definitely got a bit of a switch coming over there. Still no idea when Ishiba's going to resign, and any news on who's coming in?
No, he's still saying that he will remain, so that he will stay on board. And actually, and the funny thing was that they have been voted away, the LDP. But if you look at the voters, there's been a poll of the voters. There's nearly 70% who want him to stay on, so to continue. So they punished the LDP, but if you look at it individually, the voters don't find anyone else to take up the baton, and that's also very interesting, I would say, and obviously promoting or pushing towards still a status quo, but having to take into account all those third parties, or a possible third party. It doesn't seem that they will find the government at all, but it's like a minority government being there now, and just hoping that they can find a third or a fourth party for everything that they want to push through. So
Yeah. A long running story, nevertheless, as everything is with Japan at the moment, or ever. Right, let's get straight into Friday stuff because there's not been much out today in Europe as far as data is concerned. So we'll get straight stuck into all the fun and games and fireworks last week. And that's 73k non-farm payrolls, which was a bit of a story in itself, but nothing compared to that revision that we got, and a whole host of stuff and other stuff coming out around that. So on the face of it, the jobs data looked like a bit of a stinky one. Although some of the other numbers held up, wages held up at 3.9%, so they went higher. They're still glued up near that 4% mark. The unemployment rate, that ticked up a pip as expected, and we saw the participation rate coming down a bit as well. So that made it sort of double negative, but still not rocketing on the unemployment rate. A load of messing around going in the different sectors, government payrolls and whatnot. All of that ended up in Trump firing the head of the BLS, who compiles all the data. We'll get into that in a moment. I mean, it's a bit easier perhaps coming in with fresh eyes, not seeing the data as it came out and just seeing the after reaction. Obviously, we've seen a dovish tilt from the market, ramping up September cut expectations from the Fed, obviously coming so soon after the Fed stayed on hold. It's caused a bit of a wild reaction. My opinion, I don't think that's a set of jobs data that anyone needs to panic over, unless it becomes a trend. But I think, and Kay, you can correct me if I'm wrong, we're possibly or have seen a market doing its usual pendulum swing, and now it's going to get overly dovish based on what we've seen. What did you make of those jobs numbers last week?
I would have agreed with you if we would not have had those two monster revisions, which are, we can have revisions at time, but they came at a time where it's not expected to be. And I think no, I think it's bad, and I'm actually surprised that after all those revisions, that the actual unemployment rate is not coming out rather around 4.3, 4.4. You know, but no, I really think it's a bad one, and pushed by those revisions, and then you have, because we need to look at what it could be for the dollar. But then you have like, and there was like this whole scenario coming out around there, because around the time, because then we had like, and that was very strange as well. Half an hour before, the two dissenters, Warner and Bowman, came out with not a joint, but a statement at the same time, needing to explain why they voted for a cut. And then as the report dropped, an hour later or 2 hours later, I don't recall, but Kugler resigned, which is, I haven't really looked it up in detail, but I'm not sure whether we already have the reason making way for a Trump appointment. And then Trump firing the BLS head because they print bad numbers. Okay, the reason is that the numbers are not reliable if you need such a big revisions. But the revisions could have been upwards, and but they were like really, really, really downwards. Now let's see who comes up, because if the next set of numbers is positive, you know that what the market is going to say. Oh well, Trump has put somebody in there who is only going to print positive numbers. No, I think the whole thing is this whole thing is negative, and we've seen the biggest drop in the short end in I think since, was it not in the 1 day drop? Is it not since really maybe the April? No, it was there. We had the April Liberation Day drop, right? But apart from that, I think it's the biggest drop since the COVID, right? Um, so yes, I think it is bad. Well, you can turn it as you wish, because that puts, if you take the 3 months together, puts the job creation number at zero. Okay, so and that's well below the positive negative needle, which is around give and take 75, 85K. And so I think really it's been a negative one. And the thing is as well, we had Powell 2 days before, yeah, being a bit hawkish as well, but then pushing us towards the really mentioning several times at the end of the press conference that the job market is now on the top of his and the Fed's watch list. We don't know afterwards, after the fact, whether it was a kind of a hint or so, but it was a bit too undovish or hawkish during the rest of the press conference for him to have known perhaps about those revisions. Otherwise, he may have warned the market more. Um, but take it all together, I think personally, I think it's really, really negative because it's where we were expecting to see the big drop in all those data, employment data for the next report, or even the one after the August or the September report. It's come now 2, even 3 months earlier because of those revisions.
Yeah, yeah, it's cast a whole load of doubt over these numbers and this data now, which is the biggest one of the month. But then it also makes a mockery of last month, because that last month's data, half of that was government jobs, which is a bit of a skew anyway. So last month would have only been, 74,000 instead of the 147. But anyway, it's all a bit of a mess, and like everything else, it's going to get a bit political. Stephen says he's already appointed a new BLS director. No, yeah, I think he's got a temporary person in the post. What's the guy's name? William Wachowski or someone like that. Trump said he's going to look to appoint someone in the next 3 to 4 days. That was last week, so 2 to 3 days now, apparently. So we'll wait and see what happens there. But the reason Trump cited as to why he got rid of him, apart from saying that the data had made him look bad, was that the guy who was head of it was a Biden appointee. So that's one reason why he's decided to fire him and throw him out, saying that the jobs numbers were rigged to make him look bad, which I don't know how that's going to happen. Right, anyway, so we had that data. We obviously had the reaction from it. We did get a bit of data after that as well, from the PMIs, the final manufacturing PMI, an improvement on the flash number, but still confirming that it dropped into contraction. And then the ISM, which went worse. Now, I have to say this manufacturing number hasn't been very good, going on quite a long time now. I can't remember what the count is at the moment. If you look back over the historical stuff, we have only been positive a couple of times in the last few years. Okay, 50 there, all been in negative, going back to 2023. Okay, so being in the positive isn't something that happens often. And we know manufacturing's been down in the dumps in a lot of countries, so there was no real improvement there. Prices paid pulled back a bit, but still running fairly hot in the 60s. Employment as well, that also pulled back a bit. So we're still seeing this softness in that market. No real surprise there. Final Michigan numbers, not too much change from the flash number, just confirming the improvement over last month. Current conditions also ticking up a bit as well. Those inflation forecasts there or thereabouts, a bit softer on the 5-year than the flash number, but a bit higher on the 1 year than the prior flash number there. So as Kay mentioned, we had Waller and Bowman, who both dissented at the FOMC, which they should have really, considering the cases they've been making prior to that, even though before the FOMC, Waller, in his comment before that said it wasn't certain he was going to actually dissent after calling for July cuts for his last 3 or 4 outings. But anyway, he did dissent and said that he dissented because he concluded that cutting the policy rate by 25 pips was appropriate stance of policy. It's saying that a host of data argues that monetary policy should now be close to neutral, not restrictive. It says while the jobs market looks fine on the surface, other data suggests that the downside risks to the labour market have increased. Maybe he saw that data before everyone else did. Fully respects the views of his colleagues on the FOMC that suggest we need to take a wait and see approach, but that is overly cautious. Sees no reason that we should hold the policy rate at its current level and risk a sudden decline in the labour market. And yes, Bowman was out pretty much straight after as well, saying that with growth slowing and a less dynamic labour market, I feel it appropriate to begin gradually moving our moderately restrictive policy stance towards a neutral setting. Says this action would have proactively hedged against a further weakening in the economy and the risk of damage to the labour market. Also recognises and appreciates that other Fed members may see things differently. Remains committed to working together with colleagues to ensure monetary policy is appropriately positioned. After that, we got after the data, we got more Fed reaction. Fed's Hamac says the jobs report was disappointing and that the job market bears watching closely. The market is still healthy and in balance, but it should be watched. Feels confident with the decision at the FOMC this week. Don't think we have far to go to reach neutral. Fed Bostic says the jobs data was significant, though the revisions were the bigger story. The jobs market is slowing from strong levels. Still need to determine what the trend of hiring will be. The risk on the jobs front could be coming into better balance with inflation risks. Doesn't believe that the Friday's jobs report would have changed this week's FOMC decision. Jobs market still looked good in many ways. The issue appears to be a slowing jobs market, and it's unclear how much more weakness is ahead. Still expects one rate cut this year, but is open to changing that view if the data supports it. Now, we got this Kugler resignation effective the 8th of August. As far as I can tell, there's still no reason why she resigned. No reasons given. Kay, was anything pulled up? Because it was mentioned in the FOMC statement that she was absent and didn't vote, but did anyone pick up on that for anything at the time?
Where we left it, it was like for personal reasons or like to kind of understood family or so or something, but it didn't. We didn't have any more information than really what she said, because she remained very vague in her resignation letter as well. She didn't mention why, like any disagreement or so. If she would have like kind of disagreed, she would just perhaps have made the third dissenter in the votes, but no, nothing of the likes. And I must admit, I haven't looked it up more this morning, so I don't know whether there was more information.
Yeah, so we'll have to see how that plays out. But again, it's increased the politicalness, if that's a word, of the Fed, because now Trump can get someone in of his own making. So that could change the landscape as well. Trump also, no surprise here, lambasted Powell before the data, after the data, saying that if he continues to refuse to cut rates, the board should assume control and do what everyone knows to be done. Right, moving on from that, we've had a bit from Canada on their trade negotiations, saying conversations with America are continuing and the doors aren't closed. So that's all still grinding, and where we're at next with that. We've also got this upcoming deadline with Russia and Ukraine, and whether they can get something done. Putin was out saying that talks with Ukraine are generally positive, but that if anyone is disappointed with peace talks, that stems from inflated expectations, and says our troops are advancing along the entire front line in Ukraine. Zelensky replying to Putin's comment saying Ukraine is ready for a leaders' meeting. In the meanwhile, Trump's been getting his boats out, and he's ordered 2 nuclear subs to be positioned in appropriate regions near Russia. Now, Putin's already, or the Kremlin's already responded saying that those subs were on manoeuvres around there anyway, so this isn't like a big deal, but anyway, headlines are headlines. Trump also said that US envoy Witkoff is going to be visiting Russia Wednesday or Thursday this week, and that sanctions will follow if Russia does not stop the war, but then says that Russia is skilled at avoiding them anyway. So who knows? We have got that deadline coming up. OPEC confirmed, or OPEC Plus confirmed, a production hike is coming. It's going to be around 547, 548 barrels per day, as was rumoured last week. That was all confirmed yesterday. But they may discuss a new round of cuts of 1.65 million barrels per day on September the 7th. So, I don't know, new cuts, new hikes, they're all over the shop, this OPEC lot at the moment. Who knows what's going on there. Right, that's it on the headline front, as far as I've picked up in my first day back. Anything else for anything else, Kay?
No, mate. I think we've covered the best of what's happening anyway. The only thing I would like to, and the people in our room, they have it because I'm publishing those weekly US auctions all the time. There is a big round of auctions this week besides the numbers. So, and looking at how the yields and bonds reacted on that US jobs report, just want to tell people to watch those bond auctions that will be coming this week, because it could get a bit hot around there.
Yeah, that'll be something to watch this week. Right, let's have a look at what is coming up this week, because we do have a few bits and pieces. Usually the week after NFP tends to be a bit of a quiet one on the data front, but we still have some stuff to do. Got some factory orders, durable goods revisions later today. Tomorrow we start getting all the final services PMIs dropping, including the ISM. That will be a fairly big number, at least if it shows something different to what we've seen, particularly in the employment from the NFP. But that will be another insightful number as to what the economy might be doing. Wednesday's fairly quiet. We get some Eurozone retail sales, not a lot in the US. Thursday, a bit quiet on the data front, though we do get the Bank of England, which no doubt will be a fun watch. What are we? We're August, so that is a forecast meeting, I believe. I think it is anyway. I'll double check, but I think that's an updated forecast meeting. So if it is, we will get a presser, or monetary policy report, as they call it. Aside from that, not a lot out from the US side of things. And again, we're looking at these jobs data, but these jobless claims case, usually they would flag any worries, but we're still not seeing anything from that. So it just casts further doubt on this NFP data.
The problem with all those reports, Ryan, is that who is responding to which report? Okay, I mean, and they all seem like pretty official data, but we are seeing so many differences. I'm starting to have difficulties to know which one exactly do we have to look at. But you're right. I mean, there was nothing in the weekly jobless claims that would hint that we would get such a horrible, at least, and in those revisions. I mean, that should have been somewhere showing up, but it didn't. And as I said, I mean, in prior years, I didn't really pay too much attention to the jobless claims, but now everybody's watching them for hints and stuff, and it didn't give a hint on the numbers. Who knows? I mean, maybe those revisions were wrong as well. And next month we are going to have an upward revision of 300K or so, and then we will again not know. And let's face it, Trump having nominated or will put somebody in the seat, I'm, I'm not going to rule it out, such a massive positive revision either. And then Trump will say, like, you see, I'm right to have fired Erika because she was missing some numbers in the report. So yeah, I'm not sure about those weekly jobless claims.
Yeah. Well, as long as he doesn't employ anyone from the ONS, then that'll be one job
No,
complete anyway.
no, but the stats can, the
Oh,
stats can
yeah,
people
or the
may have a.
Canadian ADP. Get
Yeah,
them in.
exactly, may have a revival. Expect plus or minus 500,000 workers a month, no problem at all.
Yeah, they knew how to do revisions, them lot, I tell you. Absolutely clown show. Right, anyway, moving on. Friday, we're back on the jobs data front, speaking of StatsCan, because it will be the Canadian jobs numbers coming out. So that might give us something to trade on Friday. Anyway, and then over the weekend, next weekend, we've got China CPI and PPI. So if you're following the fortunes for Chinese assets, you'll need to keep an eye on those as well. Right, that's that as far as the data and news is concerned. So we can move on to looking at a few prices and whatnot. Let's get rid of that and get rid of that. So I've not got a lot to say because I'm still doing a bit of catch up, but a lot of volatility going on. Dollar yen up to this prior high, 150.80s, all the way back down to 147s. So it is looking like it's respecting some of the levels. And when you get these volatility times, it does pay to go a bit wider on your charts. Look for those potential stretch points. 147, we've been up and down a little bit, but we've been away from it quite a way. And then a volatile move, if I'd have picked a level where it might have stretched, 147 would have been it. Now, whether we're going all the way back up to 150s is another question. We're still in this uptrend since July, still maintaining it, still keeping this longer uptrend going. And we're now carving through some of the levels, getting up to the last fib, if you like, last line in the sand for this downtrend that we've seen all year. So there is still, this has looked like it's turned, but it's becoming obviously a bit shallow and very volatile. Dollar MEX, I know came out before we've spoken about this one enough, but from my perspective, you want to just look at the bigger picture. We hit the 150 pretty much, came within 50, 60 pips of it in the end before we've seen this very decent bounce. This is why I like these big levels, these big longer term levels, because when they happen, when you get a reaction, you can get a big reaction from them. And we might be seeing a big reaction off of this one. First and foremost, as much as we bounced, we are not turning around this trend just yet. Let me go to the other chart. Okay, we've carved through some of these smaller levels. It's not confirmed that we've bottomed yet, as far as I'm concerned. If we go through 19 and hold it, that would be a bit of a strong confirmation that we are turning around. But if I could have it perfectly, I would see something like this, maybe a move down to there that holds, maybe even down to there. That would give me a bit of stronger conviction that we've bounced and that we are turning this around, or that we bottomed. Even if we test that 1850 again and hold it, that would be a strong confirmation. It's similar to what's been happening and what I've been pointing out in dollar CAD as to whether we bounced. We got this low, then we stepped up, then we stepped up. Okay, it's giving it the support structure to then go on a move and continue higher. Whether it can hold this move is another question, but this is a very supportive. If you want to look for bottom patterns, this is something that's very supportive. If it happens in dollar MEX, we could get something like that. That'll be my old, low, new low, hold the old low pattern. Your 1, 2, 3. That would be a strong signal that we bottomed. So have we bottomed? I don't know. Obviously, if it keeps grinding higher, then it looks like it's going to bottom. But if you want a surefire signal. You want to move down that holds around these pie lows, and then we go on for a decent bounce. It's got a lot of work to do to turn around this move from the 21s. Okay, getting above 19 would be a bit of a turning point. So either we do that or we just go above 19 and start holding it as support. But I'm certainly not saying that we're done with the downside right now. I'm still short a little bit. Didn't get bid in at or fill down at 18.50. Didn't flip out my short, so I've got that. If we do break above 19 though, and we start to hold it, I'm probably going to fold the rest of my short. I did add to my longs 51, 18, 51, 50. So I'm sitting with a pretty tidy long position at the moment. So trading wise, I hope we don't go down there, but and we go above 19. But I wouldn't be surprised if we see that sort of price action happening either way, and be ready for it. But this level for now showing its worth, as I thought it would do and might do. Kay, you done anything in this one?
No, I was quite conservative and happy to be. I was a bit short and bought them back somewhere in, I think, 57s or so. And no, I haven't. Well, I just ping pong a little bit. Was short. Then we had the rumors of a deal. We had that kind of a deal with Mexico. We had a bit of a down move, but nothing spectacular. So people in our room know I've just cut it, and I'm just waiting for what's going to happen next. It's not overly clear either. What's happening then with Mexico, because the tariffs that's been slapped on are lower than what was the risk, but higher than what may be good for Mexico. Or to be understood, those are tariffs which are applied to goods and services which are not under the USMCA umbrella. Okay, so it's a big part is still USMCA ruled, but on the rest, yeah, I wasn't impressed with the kind of agreement. Scheinbaum had a call with Trump. The negotiators were in the US, and it seems to me that they didn't get what they really were looking for, and no, so I just moved out of it and sit back and wait.
Yep, I think we need to see what happens next with that one, most definitely. Ali, I see you're in a bit of a euro sterling short. You're short right into this big level up here. I'm still long. I did a bit in this dip, 87.02. I missed all this move while I was away, which I'm a bit gutted about, because I would have liked to have added down there somewhere. But I'm a bit top heavy in my long. Still keeping it fairly small, but I'm happy to sit in this one for a long-term trade, because I don't see anything good coming from the UK over the months ahead. So I think more upside beckons. But we're in a bit of a wait and see moment now. We're back below this level. We couldn't break and hold it here. We couldn't break and hold it here. So that after this such a bullish run here, that adds a bit of doubt over where we're going next. I think if we hold 86, 87, 86, 90 here, then it's got every chance of then going on to the highs. What was pretty good, and I've had to redraw this because this fib was down here last week, and I've had to redraw it up here. Oh, now I've blown it up. That'll do. We got close to the 38.2 in that. So as far as the trend is concerned, this bounce off of there looks quite healthy. It looks like a decent refresh of this trend. That's what you want it to do if you want to see a trend continuing. But for now, we couldn't get back up to those highs. So now we're probably going to see maybe a bit of sideways action. As I say, if we do hold 86.90, 87 here, then I would expect to move back above 87.15.20. Your TP is just above my zone here, which I expect to see coming into play again outside of all this volatility that we had. So a move down there, that'll be a bit of a line in the sand to hold that 86.70 level again to keep this trend going. But we might just see a bit of ping pong between the levels for that one and see which way it wants to go. But technically, it's still looking pretty bullish, but it needs to carry on, and it needs to do a bit more to get going. As I mentioned, dollar CAD as well. Have a quick look at that. This one again hit a level, couldn't get through 138, 60, 70s. It's been a level that we've seen a lot of action around previously. Let's see how far that goes back. So it was these series of highs into this area, 2023 through 2024. We couldn't break. So it's no surprise to see this showing up as a bit of a level again. So that's the big marker for this one. Decent bounce off that prior low, got up there, failed. Now it needs to hold probably around this zone. It's deciding what it wants to do in here. This 137, call it 55, 60, all the way to 80. We've got a bit of support coming in here, but if we're below this 37.55, it's going to look a bit wobbly. But this area, 37, 20, 35, is going to be very important. If we bounce from there, that's going to keep this move going. Then we might have another crack up the high. If we're coming below this, though, then again, we're not quite ready to properly turn around this trend, despite how it's looking good for a bottom down here. So lots in the mix, lots to do for this one, ways to go before we get to the 38.2 of the year's move. So this is still all pretty short term, this bounce. So a lot more work needed to be done there. Right, Kate, I'm going to hand it over to you, mate.
Okay.
Oh, no, all my menus have changed around now. Where is all that gone?
I can take it if you want.
Yeah, go and take it. I don't know where my buttons are gone. Go away for a week and everything changes.
Let me see. Here we are. Can you guys see my screen?
Not yet.
Oh, really? I'm on there. Do you guys see my screen? My our viewers. Oh, what's happening here? Am I not sharing? Oh yeah, people see it. It's okay. Right, cable brand. Your favorite one, 133. As I said on Friday as well, if the report would be like a real stinker, 133 would be a hard, tough nut to crack on the cable, whatever happens, and it is. It really is a. Do you see Ryan's screen, Stephen?
Yeah, hang on. I don't know what's. It's still saying that my screen is sharing.
Okay, I stop sharing, and you give me the hand if you can.
Yeah, I'm trying to. I can't find the button to even stop sharing. Bloody thing. Because I used to have a button on my machine. I could click and it says stop sharing, and I can't see that. Bloody hell! What is going on?
Can you just make me host also?
Yeah, let's give that a go. Where are you?
We're very good in trading and helping people, but when it comes to computer tech,
Yeah, right. Try. Right, I made you host, so see if you can take it away.
All right, let's see if I can share now. Okay, I'm sharing. People, do you see my screen?
Nope.
Oh dear. What is that? Oh, Fred says yes, but is it my screen or Ryan's? Oh, you guys see my screen? Okay, lovely. All right, great. Okay, so cable, as I said, 133 would have been a tough nut to crack. 1, 2, 3, and a couple of more tries to get above there, and it's again rejecting this morning on another attempt. It's your level of the day, and even I would argue it's the level of the start of the week. Before, if we really go through it, and now we need to stretch it beyond those couple of algo pips, it's probably going to go back up into that 133, 65, 75 zone, which really was the hinge or the pivot level that we had into at the end of last week, right? You look at how we went below, retested it, and then really went down a fair leg when the dollar came back bit on the FOMC, etc. It is a strong level. Okay, so if it goes, I think this level is your next major watchtower, I would say, for future developments. On the rest of the day, looking at how the dollar now behaves, and we will of course have to wait now to see once this market has digested the bonds, the equity markets, all markets have digested what happened on Friday. We will have to see what will be the next step, okay? Because we know that markets come in waves, etc. Therefore, if we get a little bit more retracement in the dollar, this 132.5 should show up. But I'd say that for on the day, really, we have to look back at if we get down there. We have to look back at what's going to happen in the low 132s as well, because that has been an accelerator in the past as well. So two levels here, basically all the 50s or the round numbers. Every 50 pips, it's going to be relatively important to the downside. But I'd say really watch what's happening again around 132 if we get there. I'm going to say sterling is not behaving well on euro sterling, because we've seen this big dump on the euro sterling after the market getting nervous about the US EU deal, and then the end of the month, and especially the day before the real month, and euro sterling really got hit and then started to ramp higher. And since then, actually, euro sterling has remained kind of bit. It's your barometer really for strength in the sterling or not. So it could be that we see a bit more corrective activity on the cable. But I would say the rest of the dollars is I can't see the dollar getting it all back straight away, because there's been a bit of damage done on Friday, right? So if you turn it into euro dollar terms, I think we may see these kind of levels being traded. So allow for 115.40, maybe 115.20, 25 if we get more consolidation, I would say. But anywhere closer to 115, maybe this 115 figure 20 zone initially this week, I would see it hold if we get more corrective activity on the dollar, unless something comes out regarding reports or some trade, which is again very positive for the dollar. But I think again some damage has been done. So I would rather, over the course of perhaps the US session, see this 115.75 give way again, and perhaps have a look again at 115.90 figure, where I think is going to be the important resistance. Call it 116, okay? If it goes through 116, then we may have a bit of an additional push through up to 116.5, and the market is really is actually not really sure what to do about it. Yes, we had this big reaction, because we had this big reaction in the yields and in the bond market, and the dollar really got sold on all those numbers. But it still seems that this market is not overly sure yet. Okay, my bit of a bias for the start of the week, I think, is higher, but I'm not going to put too much money on it. Really, I'm not going to take too much of a risk on it. Before I move over to the Swiss alley, look what's happening in gold. And again, yields dropping, uncertainty. Those flowers with pots attached being sent over and back and forth between Russia, US, Medvedev, etc. Gold has rallied again. And really, unless the yield picture changes, unless we've got some really good news, or that really pushes the dollar higher again, I've got the impression that we are in for the retest at least of 33.75, and possibly get a move back up to those 34s, and why not those prior highs in the 34.5 zone. That is how I look at the start of the week. Bit of a always test my views towards what is really happening in the market, I really thought that the Asians would buy more gold than this on to start the week, and they actually didn't. But we have to remind us for that we also saw a couple of those sessions in Americas 2 weeks back it is, where they themselves started to buy gold. So I'm going to be very, very interested in knowing what's going to happen in this US session, okay? I would expect either around here, 33.45, but for sure this zone here, if we get any setback, to start to find buyers again. 33.30, 33 and a quarter, down to that 33.10 again. We could have something like this and continue to move higher. But we'll have to wait and see what the Americans do. I think this move is justified, and a continuation would also be kind of justified. Quick look at the Swiss. We know about this the missed trade deal because Trump slapped 39% on non-pharma and etc. Products onto Switzerland. Everybody really surprised, and that puts pressure on the Swiss franc. And your barometer is really the Euro Swiss. We're again around this zone that we saw here. We need to get through there to get a move back into the 94s. It is looking okay, but don't forget that also Switzerland, the Swiss Prime Minister has said that he would, after consulting with all the companies, etc., he would go back to the US to try and negotiate a better deal. So be careful because headlines can drop at any time, okay? But for the time being, it is looking okay, right? It's looking okay for the time being, but we need to get through this level. The dollar Swiss, well, it's a combination of both really, right? We saw the setback in the dollar, but we are still, and I'm going to go on a little wider one, we're still about above this kind of like, what shall I do with it zone, okay? We're trading 80.90, which is a little bit above there. I think the setback that we have seen here is giving you a very good idea where it should hold, because look in the past as well, 80, 15, 20, 15, 20, 15, 20, 15, 20. We stopped there as well on the open when we did the lows, and then we started to move higher again. That's your support. And we also have on the 4-hour a big conversion of all those moving averages. That 80, 15, 20 is your level to watch out for. If you see a break of this, we're probably going down, but for as long as it doesn't, respect it, okay? So top side, well, I don't know. It's all going to depend on the dollar. I wouldn't rule out actually if a move back above this 81.05 if the Euro Swiss continues perhaps to push higher. We see a bit of consolidation now in all the dollars as well. Why not, going back up to 81 and a quarter, 81 and a half, and then look back. But if we start to get back below 80.65, we're probably going to have a look lower again. But my major level is right here. Ryan, looking at the clock, mate, I think that's enough for a Monday. I'm giving it back to you.
Good stuff as always, and thanks for covering me back while I was away. And yeah, have a great day, have a great week, everybody, and we'll catch you bright and breezy tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.